Do you think that the housing market in Los Angeles is going to crash? Well, you're not alone. 70% of Americans think that the market is going to crash in 2025. And if I'm being completely honest, I was a little bit worried about that too. But this video is going to give you all the information that you need to make an educated decision on whether you want to buy or sell in 2025. And as always, if you do want to buy or sell, there are free buyers and sellers guides in the description down below, and it's completely free. So let's talk right off the bat about home prices. Business Insider says, though many Americans believe the housing market is at risk of crashing, economists who study housing market conditions generally do not expect a crash in 2025 or beyond, unless the economic outlook changes. Now, economic outlook changes to me means if there's a war or if there's a stupid self-inflicted announcement from this administration, something major that could really wreck the economy. Those kind of economic outlook changes could change this entire prediction. But the one thing that is keeping this market from crashing is our housing inventory. It's the basic law of supply and demand. Mark Fleming, a chief economist for First American, said, "There's just generally not enough supply. There are more people than housing inventory. It's Econ 101. So if you look at this chart nationally, our housing inventory has gone up 30% since last year. Now, even in Los Angeles County, we've also gone up about 31% of our inventory. But the thing that you have to all keep in mind, and something that will give you some perspective on this, is that we are still 16% below our pre-pandemic levels. And our pre-pandemic housing market was really good. Now, because our inventory is increasing, that means that the rate of home appreciation is going to go a lot slower than it did during the pandemic years. We were seeing 10, 15, even 20% appreciation over the last 3 or 4 years. Well, last year we saw 7%. This year we're going to see about 3.9%. Lawrence Yun is the chief economist from the National Association of Realtors. He said home price growth will moderate due to more supply coming onto the market. Having income and wages rise faster than home prices are welcome to improve affordability. Well, yeah, Lawrence, of course, having more money and better wages is going to be better for everybody. An increase in housing inventory is a really good thing for buyers because they have more selection. They can negotiate better on their contracts. I've noticed for my buyers over the last few months, I've been able to negotiate better closing costs. They've covered all of the buyer's agent's commission, and we were able to get some repair credits on some of these contracts. You have a little bit more negotiating power when there's more selection of homes on the market. And Freddie Mac says, we expect the pace of housing price appreciation to moderate from levels seen in 2024, while still maintaining a positive trajectory. So the market, according to Freddie Mac and a lot of other economists, are not going to crash. It's going to continue to go up, just not as much as it did during the pandemic. Now, the big, huge factor in all of this housing market is the mortgage rates. So what are mortgage rates going to do by the end of the year? Right now, as of this filming, mortgage rates are at 6.95%. And in April, we had a crazy volatile time. Mortgage rates went down to 6.5, then they went up to 7.1. It was all over the place, and it was giving me a little bit of whiplash. So what are mortgage rates going to do by the end of the fourth quarter? According to 4 economists, including Fannie Mae, the Mortgage Bankers Association, the National Association of Home Builders, and Wells Fargo, the average of those 4 is going to be 6.36% by the end of the fourth quarter of this year. Now, that is a welcome relief. Even 0.5% in our market here in Los Angeles makes a huge impact on your monthly mortgage payment. And again, Lawrence Yun, the chief economist from the National Association of Realtors, says a meaningful decline in mortgage rates would help both demand and supply. Demand by boosting affordability, and supply by lessening the power of the mortgage rate lock-in effect. Now, what is the lock-in effect? This basically means that when we had interest rates at 3 or 4%, a lot of people, over 70% of everyone who holds a mortgage back in those time periods, they refinance to 3 or 4%. And you do not want to move from a 3% to a 7% mortgage, so they just don't sell. They keep their property. And that is the lock-in effect that we're seeing, which is really inhibiting the inventory that we should be seeing on the market right now. Now, a lot of people say, well, what if we have a recession? Well, 4 of the last 6 recessions, we saw home price increases during a recession. So just because we have a recession doesn't mean a home is going to crash in price. What does all this information mean if you are a buyer right now? It it means that you're going to be able to negotiate much better terms on your contract than you were even a year ago. Especially if you're looking in the condo market, which is pretty soft right now here in Los Angeles, you're going to get a lot more options and a lot more negotiating power. So if you are a seller and you're thinking about selling your home in 2025, the biggest advice that I would give is that you need to price your home really well, because there's more options for buyers. They're going to be a little bit pickier. And if you see a property that has been on the market 60, 70, 90 days, what's the first thing that you think of? I know that my buyers always think, well, what's wrong with it? Is it either overpriced, or is there a repair issue, or is it a location issue? There's always something wrong with a property if it's been on the market 70, 90 days. That's just what everybody thinks. So pricing your home well at the very beginning is going to be really important if you decide to sell your home in 2025. And as always, if you need any help with real estate here in the Los Angeles area, I'd be more than happy to help you out. My phone number is 213-268-6832. Again, my name is Felipe Crook with eXp Realty, investing in your dreams.